Residential interest rates have just dropped below 6%. Why are you listening to this episode? Get your ass out there. Go buy some real estate. That's what people are saying. Is it going to become a feeding frenzy? Do you jump in and start buying shit? What's the strategy? How do you take advantage of this market, this interest rate market? What do you guys think?
I don't know. I'm not a big proponent of watching daily interest rates. But I'll tell you, interest rates are down. The general market, I think investors are a little bit scared. I think there's fear in the market. We see the equities starting to drop. We've got some wars happening, in Iran and in different places.
You don't say.
Well, the reason I'm saying that is I think it instills fear in folks. I think
I thought we weren't talking about that. I thought we weren't talking about war and politics and.
Well, I'm not gonna dig deep into it, but I'm just saying that when you look at like the global environment, I do think that affects individual psychology. And what I'm getting at is that you have interest rates dropping as well as global uncertainty and or fear. And that I do think that there's an opportunity to go out and make deals. People look at their retirements different. They look at their assets differently. It changes psychology, whether you believe in the war or you don't, or whatever, or politics. We're not getting into that, but I'm just saying it does affect psychology. And so when you have that paired with I'm not going to. When you have that paired with interest rates dropping, I think it's always a good time to go buy real estate. But when you see those fundamentals happening, it's a great time to go out there and make a deal.
Mitch, they're dropping, but dropping to what? I mean, they're just below 6%. We're talking, single family owner occupied. So many people across the United States locked in 3% money on 30-year fixed rates. So, if we're looking at investor loans, we're looking at commercial loans, then yeah, there's going to be an impact. Like if rates drop drastically, if rates start to get in the 4s again, or even the low 5s, I have investment properties that I will probably refinance. Anything that's a higher debt or significantly higher debt, I'm going to look to refinance. But when we talk about owner-occupied single-family homes, going from just dropping right below, let's say, 5.875, it's just below 6%, or even 5.75. We have a whole bunch of owner occupants that locked in 3% money on 30-year fixed income. Those people aren't refinancing. And that's a lot of Americans.
Or selling.
Or selling. They're not selling their homes, and they're sure as hell not going to go from a 3% loan to a 5.75, 5.8, 75 loan. And so I don't think it's actually going to be that impactful or really move the needle, especially in the single family market. Commercial loans, it's a whole nother story, because commercial loans also typically come due every 5 years. It's not uncommon to see a 25-year AM due in 5, or sometimes due in 10, but those loans have to renew. And so you will see, I think, refinances as interest rates drop and people want to, get better leverage, better debt on their property. We may see that, and that may be a huge opportunity for investors. I just don't see an interest rate dropping below 6, really, really moving the needle that much across the board nationwide on single family or small multifamily.
Well, we're doing commercial stuff, right? So I was thinking more along the lines of buying commercial or investment grade assets. I do think there's this window. I mean, Mitch, you and I are starting to unlock equity now. We're seeing rates to a point to where we can put more leverage on some responsible leverage on some of our assets, pull, some multi-6-figure paydays out, which is fantastic. But to your point earlier, Mitch, I think there might be a window where if rates are compressing or going down, but you still see this sort of fear and uncertainty in the market, that could be a nice window to go out and pick up some assets and lock in some decent debt, at least for the next 5 to 7 years if it's a commercial loan. So, we harp on this. There's don't time the market. Like today is always a great day to buy real estate. It's always better to buy real estate today, the right real estate with the right terms, the right leverage, the right price than it is to buy 5 years from now. But, that said, though, just to kind of sweep that talking point aside for a second, I do feel like there's an interesting window right now where sellers are like, I have a good asset. I'm going to liquidate. I need to be liquid. I need to be cash heavy. There's uncertainty. And then you can come in with good rates, which is one of the many variables that make a deal good or good to great. and you can put some stuff together and make it work. So I think there could be an interesting window.
If you like what you're hearing on this podcast and want to come and hang out with us, as well as other members who are scaling in cash flow real estate, you've got to check out our elite mastermind. Inside, we've got investors who own hundreds of millions of dollars in real estate and are doing amazing things. We'd love for you to come join us. Click the link below. Yeah, I don't think that any one interest rate adjustment is going to make a massive difference. But when you pay attention to the entire story, I do think that there's a difference, in investor psychology. And I enjoy watching the market, interest rates, equities, because I think you can start to gauge and understand investor psychology. And when you look at, when you look at equities dropping relatively quickly lately, the last week or so, equities are a great sort of metric for investor psychology, either fear or greed. And so equities, to me, when they drop really quickly, shows that there's fear that entered the marketplace. Equities are the most liquid asset. You can trade it with a click of a button versus a property. It's a buy or sell, maybe takes 60 to 90 days. And so when I see that, as well as interest rates overall have moved from, say, above 8 now down below 6, that's quite a movement in interest rates. And it's also an adjustment in investors' psychology. So for me, I'm not saying that like, oh my gosh, this is the best time to buy. I think there's always, you can always make good deals. But as people get a little scareder and there's more fear in the market, sellers are willing to adjust their expectations and make better deals. And right now, I think that we're seeing fear into the market. We could say it's because of the war. We could say it's because of inflation, or you could say it's, we could assign a lot of different reasons to it. I'm not sure exactly what it is, but I know when I see equities drop that fast and interest rates drop, I do think there's an opportunity to go out there and make even better deals.
Yeah, there'll absolutely be opportunities in the commercial real estate world. I do think those that already hold assets that purchased on fundamentals but with higher interest rates are now going to be in a position where they can lock in better financing. I mean, look, if interest rates continue to drop, I personally have properties. Like if I can get better debt on it, why wouldn't I? If I can pull out some tax-free cash and get a lower interest rate, why wouldn't I? I also think there's an opportunity for investors that want to get in, as interest rates drop. I don't know if prices are going to move as fast, right? So depending on how fast interest rates drop, I think pricing kind of lags that. It's hard to know where the demand's going to be, what supply is going to look like. But as interest rates drop, I think you're going to have more commercial investors also wanting to get in because there'll be a period of time where the numbers do make better sense and they can also get better leverage, better debt on the property, going in. But that said, I still think we're not going to see, huge movement in the primary resident world, which is usually what these headlines are talking about. But investors pay attention. I mean, like I think Mitch, you said this, like you're not trying to time the market, but when you're in the game, you can take advantage of the market so that when interest rates do drop, you're in a position to refinance, or when you're ready to sell and you have that equity and interest rates drop, the buyer has some purchasing power. So now it's an opportunity that you could sell. There's more lending opportunities for that incoming buyer, which then puts you in a position to be able to actually sell your property. So I think we'll see some of that. Big picture, I don't know. I think we'll need to see interest rates continue to drop and drop even farther until we really, really see some big movement across the country in most markets.
Well, and I think too, when you look at the equity market, it's fear and greed. We all know that, right? Supply and demand, it's fueled by individual psychology or private equity psychology, or mutual funds, or manager psychology. But it's similar in real estate. It's fear and greed. So when you're holding a property, either you've got fear or greed that's entered your psychology. If it's fear, then it's, hey, I got to get out of this. I got to harvest what I've built over time and sell and harvest that equity. Or it's greed by saying, no, I'm going to hold because I know that there's more opportunity here. So all I'm saying is when fear enters the marketplace, I think that there's different levels of fear depending on the individual, and there's more opportunity potentially to go make deals. In today's marketplace, there's all the way from, hey, I'm a little bit scared of the future, I'm not sure exactly what things are going to do, to panic. That's happening right now in the US, right? In the same marketplace, you have people that say, you know what, I'm super confident of the future of the US and the economy and the housing and all those things, and we're going to hold forever because I know that I believe in the US, I believe in this, right? So like you have all varying degrees. But when fear enters the marketplace, you do get folks, especially think about someone who's 65, 70 years old, they built a portfolio, and they're like, look, I don't know exactly where things are gonna go. Fear has entered my mindset, and I'm gonna take my chips off the table. So I think a certain amount of people, a certain amount of investors will start hitting that panic mode, that mode where they want to go make a deal, and it's more likely when you see fear into the market.